Now, this is the first week of the month of November. Earlier week was having the combination of October ending. As a result, they made volatile moves, or the month end and the month beginning trend reversal moves. So they made the drop quickly and also rise quickly. Alternative moves, they have done it in order to trap the traders on either side. Now, from this week onwards, they are expected to make the less drop and more rise moves in the market. So, as a result, we'll come across the week beginning false move today, being the first day of the week. And also the session timings I mentioned, which is modified session time based on the shift in daylight saving. So as a result, 0030 to 7:30 GMT is the Japanese session, and 8 to 14 GMT is the European session, then 14:30 to 21:30 is the US session. In between 30 minutes here, you come across the gap time, and after that of 21:30 up to 0030 GMT of the next day is a gap time between the days. So you need to find that gap time that make false move, and you can do the gap time trades also. They quickly drop, you can take a buy. They quickly rise during gap time, you can take a sell and book profit within 30 minutes from the start of the session. Now today 7th, they are expected to make the swing and slide move during the Japanese session, and then start rising from that of the European session and firm up during that of the US session also. And tomorrow, 8th of November, it is going to be the election day, but the election starts from the early morning of the US timing. So before that, what they are expected to do is make a quick drop or a dip and firm up. So create the uncertainty by making a downward stop and start firming up and rise and firm up during that of the US session. So everybody will think that the election result is going to be very clear, and then late night will come across the uncertainty could be created, and as a result we'll come across the dip in the case of Euro and GBP during that of the early morning and then start rising it. Then again you'll come across, based on the speculation and based on the exit rule, etc., they are expected to create the uncertainty, and then they are expected to rise during that of the European session and then drop during that of the US session. Everybody will be wondering that expected candidate has become the US president and why that drop has happened. That is what people will be wondering. And that is how they make the moves, they create the market sentiment and act against that of the traders. So once the expected candidate, namely Hillary Clinton, is being elected, there will be firm up during that of the Japanese session and also rise during that of the US session. And again, they are expected to drop, and they will say that the policies are going to be different and there could be USD weakening because of that. So that is how they will make the moves. And then on Friday, they are expected to make the dip and then firm up and swing and slide during the European session in order to induce the long holders to liquidate and start firming up. Then from next week onwards, we'll come across swing and quick rise moves happening in the market, and that will create the surprise against that of the traders. What they have been talking about during this week are being discounted, and then the market is under the grip of risk appetite. So that is how they are expected to make the moves, and that move will be till mid-January 2017. They are expected to make very aggressive gaining moves in the market during the month of November and more so during the month of December and early part of January as the yearly trend reversal move. Always you know that the quick moves are false moves, and the players are expected to make every single announcement to their advantage and try to gain quickly the levels in the case of Euro and GBP. And surprisingly, they will be gaining the levels in the case of USDN as well as USD and the commodity pairs, namely USD CAD and Australian dollar, are expected to make the wide range swings on either side. Now, looking into that of the market currently, how they are, Euro is showing about 66 pips negative net change, and USD Yen is showing 1.35 pips, 135 pips positive net change. So they have started showing the USD gaining move and also GBP around 66 pips from that of Friday close as the USD gaining. CHF also gained about 70 pips from that of the Friday close, 79 pips. Then, as far as the commodity pairs are concerned, USD CAD has made a dip, that is USD weakening move of 13 pips. Australian dollar has done 1 pip negative net change as a nominal USD gaining move. So you find the commodity pairs started showing the contrarian move. So this is how they just make the weak beginning moves. They start with the commodity or commodity pairs and commodity crosses, and then come to that of the yen crosses and finally to that of the majors and that of the European crosses. So that is how the sequential trend reversal they make it. And during this time, you will find aggressive move will happen in the commodity crosses to start with, then yen crosses to start with, then the majors, then finally the European crosses. They will make contrarian moves in order to bring in volatility in the case of the European crosses, namely Euro CHF, GBP CHF, and also Euro GBP cross.